October 16, 2019, it's Wednesday, guys. It's going to be a phenomenally awesome day. The probability of hitting 2750 by Friday is definitely still here. The 8:30 retail sales report could actually bring this market to its knees. All dropping again around 5 a.m. Bears bets are back on despite of this beautiful bullish moves yesterday when all the stars actually aligned for the bulls. Now, bank stocks hold the market together, but for how long is the question. We are going to be looking to see if again today JP Morgan is going to get above that 120 critical level. If it fails to break, expect a reversal in JP Morgan and therefore the banking stocks despite of the strong move higher yesterday. All the banking stocks announced in earnings pre-market as well, they are up, but they already showing signs of reversal as well. Now I'm going to reveal the little secret that I often use to determine the sentiment. All the semiconductor stocks today, guys, I actually go in and I try to place orders for stocks. You can't trade options until the market open, but on stocks you can still short them, like literally short like a few hundred shares of a particular stock. So this morning I just try to determine the market sentiment, and none of the shares of any semiconductor stock were actually available to short. And I've tried NVIDIA, ASML, AVGO. I didn't try all the cheapies like AMD or Micron or anything like that. But all the bigger names that will make you a substantial amount of money when it comes to options, they were not available to short, which is a good sign. So the simple strategy is just short the semiconductor sector today. It should be a very nice, simple, and easy trade. We got a couple of catalysts as well. Clearly, ASML is a part of the earnings watch list for today, and so we're going to look into the trade in detail. But some other cool trades that are developing, particularly this one right here on Workday, which has been institutional favorite when it comes to one of the cloud plays, could also negatively impact Amazon. We're going to take a closer look at that as well. We will post a separate video on Netflix earnings before 4 p.m. today. But here's what actually took place yesterday. As you know, in the group, we did take a bullish stance intraday, going actually bullish on Amazon shares in the expectation of a short squeeze happening by the end of the day. But the short squeeze didn't materialize. It did to the extent of about 20 bucks. So those of you that were getting in those options about 1.8, when we send out the alert, you could have sold them at 5-6 bucks. So 250, 300% returns in that quick trade intraday on Amazon calls. But we clearly suggested reversing the trade, and already pre-market, there's a lot of things that are showing that that reversal is going to be viable by the end of the day. So at one point, all the stars were aligning for the bulls, and this is why we temporarily switched the call from being a bull, from being a bear to a bull. Oil was going up, Apple was going up, VIX was going down, and banks, even though initially they were showing signs of a reversal, they were actually hitting record highs, particularly JP Morgan. And I know every institutional investor was observing the price of JP Morgan shares moving above 120. But all that excitement faded rather quickly. The nirvana for the bulls only lasted for a few hours because it's fundamentally flawed. And there's clear some indication that we are officially in the slowest pace when it comes to growth since 2008. So that note actually comes out after this bullish day yesterday. And I guess the only reason the stocks are moving higher is because it's bad, but it's not bad enough. We're not quite to the point preceding to the drop in 2008. So, but there's definite signs, and at some point these signs are going to be so obvious that the market is not going to be able to ignore them any longer. But typically the market, the big drops in the market, they come within a few days. And I think today for the semiconductor sector, that is going to be that day. Basically everything from being super bullish yesterday all of a sudden turned super bearish by the end of the day. If you take a look at the oil chart, you've got oil actually closing the day, despite of these bullish move intraday, it did close at 52.81. So very bearish chart after this death cross. You see any pop, any bounce is to be shorted, is what the oil chart is pointing to. So the quick bounce from 51.50 to 54.55 area. And now we're back to the 52 handle. And pre-market again, I don't have a picture here, but the pre-market around 5 a.m. oil just drops like clockwork. I don't know what it is about that time frame on the oil chart, but oil futures do drop every morning lately at around 5:20 in the morning, and then they bounce and then they drop. So any bounce in oil is to be short, and if oil continues lower, we want to stay bearish. So what appeared to be a bullish momentum across the board and pretty much everything, this bullish move in banking stocks, the bullish move in oil, all of that sudden, by the end of the day, that was no longer the case. JP Morgan has surrendered that level that was critical. VIX actually hit a very strong support level while still in this very bullish formation on the moving averages in this bullish cross. So this actually gives you a very great entry on the VIX. So buy VIX calls, buy the dip in VIX here between the levels of 13 and 14. As pointed out in the JP Morgan, everybody was watching that yesterday, and it was a rather substantial move and very strong volume. A lot of bullish things on this chart, guys, with the exception of this exhaustion gap. Now we've got one gap higher, two gap higher, three gaps higher. At this point, the momentum is going to slow down. So if JP Morgan fails to break above that 120 level and actually close above 120, that is not going to be a good thing for the markets, because basically we could be looking in a prolonged scenario where initially banking stocks are moving higher, and within a few days after the earning reports, they start dropping. So basically we could have a situation of a bounce followed by a drop, which is represented by this bearish reversal candle that was created yesterday. This third day exhaustion gap is never a good sign. So today could actually be a down day for JP Morgan, and since everybody's watching that particular stock because it happens to be the best name among institutional investors' investments in the banking sector, if this one reverses, so will the rest of the banking stocks. We're continuing to short the bounces. This time the level is identified at 29.94 area, 3,004. Anywhere here, if the market bounces here, at the time I'm recording this, the future is around 29.92. So if we bounce just a small bounce higher, basically to yesterday's high, or just slightly a couple of points above yesterday's highs, this is a good area to actually come in and buy some puts. Now, here's a quick summary of the week one earnings. This is the companies we're reporting yesterday. If you see an exclamation point, guys, we're likely to actually partake in this trade. It doesn't mean that we absolutely are going to take the trade, but exclamation point does mean that this is probably the best trade for the day. So far pre-market, we're looking at ASML puts. I'm going to break down the trade shortly. We're going to post a separate video on Netflix, IBM, URI. All of those are interesting trades. We could be doing some with them pre-market tomorrow. Now, one of the things that we're going to be paying close attention to is the transports. UNP, CSX are going to be announcing earnings. This is a really nice trade right here that could pay really nicely. Honeywell, HON is the ticker symbol. S&A typically moves $8 to $10 on earnings, so this could be a very good one right here. So got tons of earnings plays, so it really pays to wait for these earnings plays, guys, opposed to just taking directional bets in the S&P futures, or if you're trading, the SPY or the Qs. This is not the best time frame to do that. You're better off focusing on some of these earnings plays. ISRG is another great hit, which could move $50-$60 on the earnings. So we're going to be paying very close attention to this one. And then Friday, typically you don't have a whole lot of companies announcing earnings on Friday, but MAN Group, the chart looks very bearish. KSU is another transport stock. Coca-Cola and some of the few companies in the oil sector are finally starting to report earnings as well. So we're going to take a measurement of all of these behaviors and how they act to really put a plan of action over the course of the next few days. But for today, basically we like shorting semiconductor stocks, and here's some of the trades we are considering. Well, this one is the transport. This one actually reported yesterday, JB Hunt. JB Hunt initially was hesitating. There was not a whole lot of stuff going on. The report is mixed. They beat on earnings, missed on sales. This and that drops to 106.9. So far, pre-market is trading at 112.24. Somebody in the group pointed, look, there's been like 6,000 call contracts that were purchased on this thing. Sometimes when you're looking at this, you really got to see whether the calls were actually purchased or whether they were being sold. There's actually a probability that somebody was selling those. I couldn't gather that data because I couldn't see exactly when that order was placed for these 6,000 contracts, call contracts. So it may appear that somebody was betting actually against. When you're looking at the volume, yeah, it shows 6,000 contracts, but it doesn't guarantee that that was a bullish bet. You really have to go in and see if they were buying it at the ask or close to the ask price, or if they were, if the contract, all these contracts were traded at the bid, then that actually tells you that they were selling the contracts, not buying them. So a very interesting detail that is really easy to nail if you're trading the day of when you're noticing this big order in the contracts. But just because it's there does not guarantee that was a bullish bet. I think the shares are going to actually go lower rather than higher in this particular name. So quick reversal to 106.9 is possible, and then after that we could just be going sideways in this one. Not probably the best trade of the day. Historically, you should know this, the JB Hunt shares typically have a strong ability to move higher followed by a drop. So therefore, we're pointing out here that if you are taking the put side on this, you definitely want to short the bounce. So a good bounce to like 112, 113, maybe even 115, that would be a great entry point in this. Targeting this level 106, 9, 107, 108, right around here to a target price to get out. So considering ASML 265, 260, 255 puts, when the earnings report hit this one, it kind of hesitated. It dropped like $1. So as you can see, there was not a whole lot of stuff going on. Then it actually jumped a bit, couple of bucks, and so far it's down to about 265. We think it can easily visit the level of 255. So we're expecting, as you can see, the stock is up within a year from 140 to 267. There's going to be some profit taken. The report is a decent report, but I think people are going to come in and take profits here. So expect a drop to 250. Not a huge drop, but nonetheless, some profit taking will be taking place today. So 255 target 1, 250 target 2. So don't go out there and buy like 240 puts on this thing. 240, 245, as you can see, that's a very solid level of support. So we want to get out of this trade before it hits the support level. So just above that would be like 250, 251, okay? But that's still pretty much, if it opens around 265, guys, that gives you a $10 drop. If you're buying 265, 260 level puts, that's a nice and easy trade. It's not going to be 1,000% returner, but it's going to make a solid amount of money, maybe 100, 200% quickly. So another thing to consider when it comes to semiconductor stocks, finally, we may actually have a catalyst for AVGO shares to move lower. So this catalyst, basically, Broadcom, which is ticker AVGO, is ordered by EU to hold anti-competitive contract practices. So that's definite negative, considering they have not ruled such thing since 2001. This is something that could hit a lot of technology stocks. So this is a definite headwind, for this thing moving lower, not higher. On top of everything, there's another negative catalyst for the semiconductor stocks, which continuously kept moving lower over the course of the last few days. Apple shares looks like it's going to be a first day down for Apple. First day down, meaning first day down after a consecutive series of moves higher that will finally resolve into a drop. As pointed out in the last couple of days, they were selling a ton of 240 Apple calls. Basically, that means that they were not expecting Apple shares to move above 238 or 240 level. They did expect, considering the expirations in those contracts, for Apple shares to temporarily move lower, probably to about 218 level, before potentially reversing moving higher. Now, for the purpose of trading this week, Apple can easily end up at like 230 bucks. So pre-market, it's already at 234.5, and officially this is the first move lower that is represented. Now, clearly they could come in, sustain, buy the dip. That's what we're not saying. It could drop to like 220, 218 this week, but there's still some room in Apple to go lower here. But we don't want to trade Apple. What we want to trade is ASML, AVGO. This is just an extra little catalyst that could propel a reversal in this semiconductor shares, including NVIDIA, LRCX, and so on. Now, here's an interesting observation for today. Workday officially has got an analyst meeting going on, and one analyst actually downgrades the stock ahead of the analyst meeting. Now, these analyst meetings there represent some really phenomenal opportunities, guys. I remember a few years ago just making some killer trades on some of these analyst meetings, because sometimes pre-market they sell and then they move substantially higher. Sometimes it just, the probability of a TRO within these analyst meetings is huge. So if you see some volume to the upside, you want to buy calls. But overall, the way everything is playing out, there is some substantial volume to the downside because of this downgrade. This basically analyst downgraded from 210 to 180 bucks. That's a pretty decent downgrade. I mean, we're not talking about, from a downgrade from 210 to 208. I mean, that's 30 bucks. That's substantial. So the stock is responding. Sometimes when we've been getting some of these downgrades, the stock have not been responding. But this one is. We've talked about the bearish chart on workday for the last 6 months, and there's been days where it dropped, but it's finally at this support level. It recently did visit this level, but it's time for it to possibly break it. So if you see some continuous volume on the sell side come in the stock, we could see this thing at 162. So it still represents a good opportunity. But again, the strategy is, what do? You short it on a bounce. So if it drops to, let's say 168, bounces to 172, that's your entry, targeting a level of 162 from there over the course of the next 72 hours. Now, this is actually a negative for all the cloud stocks, including Amazon. Despite of a potential short squeeze in Amazon and our ability to profit on the upside, we did reverse the position, and it's still a great opportunity to reverse the position today. Everything
Can't you see that I am not afraid?
Depth off is still here. The only thing that's bullish is MACD. That is the only thing that is bullish here. And so despite of the lower volume, which was easier type of day to create a short squeeze on Amazon, it did not happen. I mean, it did happen temporarily, but then it showed sign of weakness already. So with that said, it is a great area to actually come in. This could be a perfect short opportunity here when it bounces, let's say, to 1775, 76 level, which was the highest of the day yesterday, 1782, with the expectation that it would still fall. Easily $100, hitting a level of 1675, 1650 target is still very much in the cards there. Yesterday was a move one, despite of all the odds. We got a move one, guys. It's a solid move higher, followed by a move sideways pretty much for the rest of the day, with an attempt to break out higher. So if we get to this high again today of 3,000 and a quarter, 3,004, 3,005, that is a level to short, not buy calls. Today's sequence is 5-1. 5-1 is a typical sequence, but the sequence preceding these 5 was bearish, so that's why the probability of a move 1 was not very likely yesterday. This is how it looks on the chart. Basically, it's your move 5 where nothing goes anywhere, and then a move 1 hitting that level again. Now, there's 2 case scenarios here. Clearly, we could easily visit the level of 3,000, 15, 20 over the course of the next couple of days. However, there's just too many negative catalysts that are developing, and so if oil keeps dropping, JP Morgan can't breach that 120 level, VIX starts working its way higher, then there's a high probability of a move lower rather than higher. We want to stay with the course of the move, which represents a high probability clearly. So 5-day sequence 77651. There's just too many green things here. We have sort of a bullish momentum catching on here, but if you study the 13 markets move formula, it's when the bullish momentum actually picks up, you should have a higher probability of a red day. So that's exactly what we're expecting today. There is a greater probability of a bearish day rather than a bullish move higher. Clearly, there is a fight between a move 11, which we continue to see pre-market in majority of the days, and we are seeing some momentum picking up as far as buying the dips. So the equilibrium is here, the balance is here, but this weight is going to be tipped over to one side or the other. We're expecting a move 3 today, guys. Market gap lower, slightly bounce, continues low for the rest of the day. Second scenario is a move 12, where we open slightly lower, move substantially lower, and bounce by the end of the day, still finishing negatively for the day, creating basically a V-shaped formation. Also, we call that the smiley face. So if either one of these moves take place, there is an increased probability of a move 3 tomorrow, October 17th. Possible TRO in the VIX today. We are sticking with buying puts on bounces. When the market bounces, we do want to buy VIX calls. Numerically, VIX is low. It is downtrending. Okay. But what we pointed out yesterday, it could have been a move 13-like scenario. It did not take place. But today we're observing a rare pattern. We call it a reverse mirror pattern, where you see a gap down here followed by almost an immediate gap up higher. This signifies the bottom in many cases. Therefore, we are still very much bullish on the VIX moving higher from here. So we pointed out it is trading very close to the lower end of the trading tunnel, and that is actually a great entry opportunity on the call side, not the put side on the VIX. So short any intraday bounce basically to 29.94, 3004 level. Expect a volatile day today. Things could get actually pretty wild. VIX is slowed down quite a bit, but this reverse mirror pattern is very powerful, so we could see VIX easily back to 1718 by Friday. Short cloud sector. Any stock in the cloud sector is a good one. Semiconductor sector, particularly considering they have catalysts, especially the ones that announced in earnings. And oil stocks. Oil stocks continually getting downgraded here, so there's plenty more room for oil stocks to drop. If oil breaks below 52 intraday, buy more puts. Guys, stay focused. Today is the day. Let's rock. I'll catch you on the next trade soon.